Hello, I'm Tim Beggins, president of Elk Trading Company. In today's article, The Fog of War, Fractures and Rifts, How Will the Energy Markets React? In today's article, we've got an image pulling mud from a dry lake bed. This is an image from Twitter. In recent weeks, a swirl of geopolitics from Iran to China to Russia is casting a growing shadow over energy markets. These tensions aren't just headlines. They're potential inflection points for risk premiums, upstream disruptions, and price volatility. Iran, drought, crackdowns, and tanker seizures. Iran is grappling with a historic drought, rising internal unrest, and the seizure of a Marshall Islands flagged oil tanker in the Strait of Hormuz. Because the strait remains a critical choke point for global oil flows, any further escalation could pressure supply and push prices higher. At the same time, Iran's domestic refining system remains fragile, increasing the risk of internal instability feeding external aggression. Risk premiums tied to the Middle East are likely to stay elevated. China, slowing economy, growing belligerence. China's factory output has stumbled, with industrial output and retail sales slowing sharply. Deflationary pressures continue to weigh on its industrial sectors. Meanwhile, Beijing is escalating military pressure over Taiwan and sparring diplomatically with Japan. For energy markets, this creates a dual effect. Weaker demand could soften prices, but geopolitical risk could sharply reprice supply expectations if tensions intensify. Russia, drones, airspace violations, and nuclear signaling. Russia continues to escalate pressure on NATO with drone incursions and airspace violations, paired with renewed nuclear threats. These actions coincide with Ukrainian long-range strikes on Russian energy infrastructure. Markets are increasingly debating whether current prices fully reflect the risk of sustained Russian output disruption. A sudden power shift in Moscow, overthrow, or assassination could trigger dramatic price moves from near-term bearish chaos to long-term bullish restructuring, depending on the successor and sanctions posture. The key market questions: is the market pricing in Russian supply losses from drone and missile strikes? Is a Chinese military move on Taiwan being priced in? What would an abrupt change in Russian leadership do to risk premiums? Which outcomes are bullish and which outcomes are bearish? Energy markets face a confluence of fractures. Volatility is set to rise as traders weigh political instability, supply threats, and the risk of miscalculation among major powers. You can learn more on the links we've included in the article below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.